Hi everyone, it's Mrs. De La Rosa. In this chapter, we're going to be talking about double entry framework. So let's talk about debits and credits on our T charts here. So assets are on the left side of the equal sign, so they increase on the left or the debit side. Liabilities and owner's equity are on the right side of the equal sign, so they're going to increase on the right side. All right, so as you guys are working through the homework and the assessment, I want you guys to have the accounting equation and the owner's equity umbrella graphic in front of you. It is going to be very helpful as you're analyzing these business transactions and understanding if it goes on the left side or the right side of the T account. So this is posted in the course announcement section, so please make sure you have it out either printed or on another screen. That way you can use it because it is very helpful. Okay, so let's go over the transactions, and remember these are just the transactions from the bigger PowerPoint that's posted out in course announcements. So if you want a detailed explanation, that's your best place to go. But again, we're just going to cover the transactions in this video. So transaction A, we start with an investment by owner. Okay, so Mitchell Williams, the owner, invested $5,000 in the business. So this is a great visual because we have the assets, the T chart here, and we can see the debit on the left and the credit on the right. And then we have it broken down for liabilities and owner's equity. So we know that cash is an asset, so we create a T account for cash, and it's going to increase on the debit side. So we put it over here on the left side for $5,000. And then on our owner's equity, in our Mitchell Williams capital T account, it's going to increase on the credit or the right side by $5,000. And then again, we make sure that it balances out and everything looks good. In transaction B, Mitch buys a motor scooter or delivery equipment for $2,000 cash. So we have to subtract $2,000. Okay, so we subtract from the credit or the right side. So we place that over here. Our new balance is $3,000, and the balance always goes on the side with the bigger number. So that is going to be over here on the debit side. We still have positive cash. And then our delivery equipment is a new T account that we see here, and it is going to increase on the left side by $2,000. And when I add it all up, it balances out. In transaction C, Mitch buys a second motor scooter on account for $1,800. So nothing happens to my cash, right? Because we're going to pay it in the future. So this becomes an accounts payable T account underneath my liabilities because the business is now liable for paying that bill. So it's going to increase on the right side. Remember I said we increase liabilities and owner's equity on the right because they're on the right side of the equation. So we put it right there under credit. And now I go over to my asset of delivery equipment because I bought another motor scooter for $1,800, and my new balance here for delivery equipment is $3,800. And when I add that with my asset of cash, I get $6,800 on the asset side and $6,800 over on the liability and owner's equity side. In transaction D, Mitch decides it's time to make the first $600 payment on the scooter. Okay, so here's my $1,800 that I owed. I am going to subtract or debit $600 from that bill that I owe. So now I only owe them $1,200. Okay, I did pay in cash, so I have to come over to my asset of cash. And I had $3,000, I need to subtract $600 on the credit side over here, and now I have $2,400 left in cash. All right, in transaction E, Mitch made deliveries and received $2,100 in cash from clients. Okay, so first and foremost, I know I'm seeing an increase in cash. So over here, my asset of cash, On the debit side, we're increasing by $2,100. That brings my new total to $4,500. And then we know that the money he receives is revenue. So under revenue, I have a new TIA chart of delivery fees, and that is going to credit or increase on the right side. Remember, it's on the right side of the equation here, and that increases by $2,100. In transaction F, Mitch pays $1,000 for office rent for June. So first and foremost, I know I pay cash. So I'm going to see a decrease in my cash over here on the right side. My new balance is $3,500. And then office rent is an expense. So I'm going to go under my owner's equity, my expenses, and there's a new T chart for rent expense. And it's going to increase over here on the debit or the left side by $1,000. In transaction G, Mitch pays for phone service in the amount of $100. So first and foremost, I'm going to say goodbye to some of my cash. So I'm going to subtract it over here on the credit side for $100. So my new cash balance is $3,400. And then I know that phone service is an expense. So here I have expenses, rent expense, and I have a new T account for phone expense, and that's going to increase on the debit or left side here. In transaction H, Mitch made deliveries on account for $2,400. So we recognize the entire amount as revenue. And then under my delivery fees T chart, I'm going to increase it on the credit or the right side by $2,400. So my new revenue balance is $4,500. And then these deliveries were made on account. So that goes under my assets. I'm waiting for them to pay me, or this is money I'm waiting to receive. So it goes under my new T chart of accounts receivable, increasing over here on the debit side in the amount of $2,400. In transaction I, Mitch buys pens, paper, delivery envelopes, and other supplies for $80 cash. So first and foremost, I know I'm going to be subtracting $80 in cash. So this is going to subtract over here on the credit or the right side of my asset account. So my new cash balance is $3,320. I also have a new T chart for supplies, and that is going to increase over here on the debit or the left side in the amount of $80. In transaction J, Mitch receives $1,900 in cash for the delivery services he performed for customers earlier in the month. So I know my cash is going to increase by $1,900. So here's my assets, cash increasing by $1,900. So now I have $5,220 in cash. And then I need to decrease the amount that people owe me, right? So they don't owe me $2,400 anymore. I'm subtracting $1,900 on the credit side. So their new balance is $500.